Hello everybody, Steve Griffiths here, developer of the MT Predictor software program. If you'd all just let me know in the question and answers box whether you can hear me okay and whether you can see my chart okay. That would be great. So while you guys are doing that, let's just have a look at our risk disclaimer and just remind you that all examples in this training room should be considered as hypothetical. No trades are actually taken. They're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly, accept. That's the important point. You must accept that no matter what trading approach you have, MT Predictor or anything else, there always will be losing trades. That's just a fact of trading life. Right, let's go and have a look at today. Right, I want to start off by, let's start off by just a quick summary of what MT Predictor is and what MT Predictor isn't, because we've got quite a few new people in the room at the moment, so some new customers. So welcome to MT Predictor for you guys. Right, this is our NinjaTrader 8 add-ons. We also have our standalone program, which we'll be looking at a bit later as well. But as you can see, we have automatic setups on the chart. We have little history triangles that show you the word trade setups there at the time, and it allows you to place analysis on the bars there as well, so you can see what would have happened at the time. But MT Predictor is not a black box system, okay? Even though you can see setups on the chart there all the way through, you can see there they are. It's not a black box system. In other words, we don't automatically take all the trade setups, perhaps in the direction of our MTP trend, which is blue for up, red for down, and black for in the process of making a reversal. We don't do that. Why don't we do that? Well, for over my last 33 years in the markets, started following the markets back in '87, realized that basically half the time markets are random. And this is the important point we teach here, why we're quite different to a lot of other software vendors. We understand that half the time markets just do not do what we anticipate. They're random. You can't do any kind of analysis on the markets, and that's why it's pointless doing analysis then. You'll let it get cut up and make lots of losing trades. The important point is waiting until the picture becomes clear. And this is what we teach in these webinars, in how to decide on when the picture is becoming clear. For this, we go to the higher time frame chart. So if you're on a 3-minute chart, like this ES chart, by the way, I haven't got real-time data connected here at the moment. I'll probably come in and look at real live charts in a little bit. Just bear with me while I just want to do something else on my other screen. That's it. Right. So we go to the higher time frame charts. The higher time frame is between 3 and 5 time frames higher. So 3-minute chart, it would be the 15-minute chart. If you're, say, looking at a hourly Forex, it would be the daily chart. If you're looking at daily stocks, it would be the weekly. And basically, this last week, in particular, last week's webinar. So if any of you are new or haven't seen last week's webinar, go to the customer section of the website and review last week's webinar, because it's so important. Because last week, we basically had a look at what we anticipate the market was going to do in advance, totally in front of the market. So this is what we look to do. So I'm just going to go out to the 15-minute chart. I'm just going to go back to before last week, okay? I'm just going to do this from last week because I want to show you what we were doing. Here was the last pivot high on the 15-minute chart. We right mouse click, we do decision point. That then places an area of potential resistance. Can you see how that's on the chart in advance? It's before the market gets there. So what we're looking to do to try and decide on when the picture's cleared, we're looking to try and decide, or we're trying to see whether the market does what we anticipate. In other words, here's our potential resistance, and you can see this is what the market did. It went up into that resistance, then backed off. In other words, it did what we anticipated. In other words, the picture starts to become clear. I just want to go to the 3-minute chart. Just want to scroll back to last week and just show you what happened. So there was the market making this is last Tuesday, by the way. There was the market making a reversal off that high. In fact, also you can go back a little bit further and place a pivot, a DP off that pivot, right mouse click, decision point. See, there's your resistance area in advance. It's opened, hit that resistance area, started to come down. Remember what we did last week? We then put a DP off this level to anticipate where it was potentially going to make a minor support level. This would be minor support because it was on the time frame we're trading. Remember, we're looking to see if the market is making reversals of higher time frame support and resistance. That defines our large degree trend. So this is what the market did. It came down, it bounced off this level, it then was mucking around about here somewhere. About here. Just want to show you some screenshots that I actually took a bit later, just to show you, just remind you what we were doing at the time. So these were from the market last week, okay? This was our standalone program. So this is what we had last week. You can see this was live data at the time. This is where the market was. You see exactly as we have basically there. In other words, we had the higher time frame resistance. The market had made a reversal at that. It'd come down into minor support. We then are showing how we can then use some of the other tools in MT Predict to project out in advance. And what we were looking for was saying that was a potential A, that was a potential B, and we were projecting out in advance to see where a potential wave C could end for a potential trade setup. Okay, so this was live last week, totally and utterly in advance. What did the market do? A little bit later, this is what it did. It went up, it then took that low out, but it then made another wave B. So redid the analysis, and again, then projected where these were going to be in advance. So I'll just redo that on this chart here, just so you can see what I do. That's where it was. So I right mouse click, WPT up. Again, this is quite advanced stuff, and it's what I was saying last week, but just to show you, I think Mark asked this question, how can you anticipate in advance potential areas of where reversal is? We looked for a wave C. We did 1, 2, 3 clicks. And that is where the typical wave C WPT was. In other words, there it was for a potential reversal. We also said we're going to look for a wave 2 or B off this swing down here for a potential reversal. Whoops. Why are we all setting this up like this? Well, we're setting this up because this is what we're looking for. We're looking for the market. I'll just clear that one off. I'll clear that one off just to make it a little bit less confusing. So what we're looking for again is we're looking for the market to make reversals at our higher time frame support and resistance zones. In other words, the market is doing what we anticipate. When the market does what we anticipate, we then deem the picture's clear. When the picture's clear, we then can analyze what we anticipate the market's going to go, and then we wait to see whether the market does indeed what we're going to do, or whether it's going to do what we anticipate. So I want to stress this again, that this was the setup. We had this on our charts before the market even got there, okay? Want to totally stress this again and again, is what we're doing is we're projecting in advance. We're not just doing any hindsight kind of stuff, and this is where we were basically last week. So we anticipate to say, right, if the market gets up into that level, we could then see whether that could be a potential reversal. And I think I said that at the time last week. So let's see what the market did. It went up, it made a potential setup there. You can see as by our history triangle, see the history triangle there? So if I right mouse click, do analyze trade setup, that gave you our position sizing. Remember, our position sizing keeps our initial risk small and under control. In this case, less than 2% of a sample $20,000 account. Obviously, you can change the size of the account if you wish to as well. You can set those up yourself. But that gave you the position sizing. If I get forward, took you in for a short trade. It then stopped you out. Do you see that? It then came up and stopped you out. This is so important to understand. There aren't many gurus who will start off their training by showing you losing trades, but this is absolutely vital, is that you must understand that losses can and will and do unfold, no matter what trading approach you take. But because we use position sizing, the losses are kept at what we call one risk unit, i.e. 1R, one risk unit. So that would have been a loss. Just going to clear everything off, so we'll lose some of that analysis. But if I go forward again, there is another setup. Our MTP trend is gray to show you in the process of making a reversal. So if I right mouse click now, do analyze setup, again, the position sizing. But this time, it took you into short trade. If I scroll forward, that would be then your target. I have to scroll forward like this because NinjaTrader just hides some of these. So of course, you know, you would have been in a short trade here. So this was the setup that then unfolded. There was our wave 3 trade setup. What happened the rest of the day? Well, that happened the rest of the day. There we go. So how many of you people caught that? I'm hoping every single one of you who's in the webinar last week, because I just really want to absolutely stress, and again, you can review the recording last week, is you saw how we were starting to build the picture up in advance. We saw how you were beginning to prepare in advance for a potential area, that you knew that you were looking for that particular area for a potential reversal. And there it is. It unfolded absolutely perfectly. So loads of you coming in and saying, I did. So well done. Glad you all made some good money on that. That was absolutely nice. But this is the whole point of MT Predictor and why it's such a good example, in that what we're looking to do is we're looking to trade when the picture's clear. When the picture's not clear, i.e. through the random, what we call when the market's random, then you stand aside. And that's the whole fundamental basis of using MT Predictor. And it seems to make sense. I don't know about you guys, but you know, if you're only to trade when the picture's clear and not trade when the picture's unclear, surely that makes sense to everyone. So this has been an absolutely perfect example of that last week. There we go. And a good example of how we had the first sell set up there. We wouldn't have particularly liked that one there, because that hadn't reached the wave 2 or BWPT. So that one there would have been a -1. That one then there would have been a profit. But look at the profit, 8.7, or can I just say 8.5? 8.5 times the initial risk. So that profit was 8.5 times greater than the previous loss. And that is what trading is all about. So this whole picture here just basically encapsulates, so I couldn't say that very well, exactly what we're trying to do with MT Predictor. Wait until you get the market making reversals of higher time frame support and resistance. You know, there it did perfectly. Look, it reversed off that level perfectly. And then you deem the picture's clear. One last setup I want to, or picture I want to take is, you can say, okay, where is the market likely to go down? And the last picture, which I could bring into the screenshot here, was there was our 15-minute support zone as well. I didn't show that earlier and I should have done, but that was shown at the time. So we had that level on our chart as the anticipated support zone when the market was way back here. And you can see that's exactly what it did. So there's the picture perfectly. If you'd been really aggressive, you'd have seen that the market had gone beyond our strength band. You see that? It had gone beyond our gray band. That's where these gray lines are. They are strength bands. So the MTP trend here had gone beyond the strength band. So you'd deem that the market would probably go a bit further. So you could possibly use our ATR stop, which is the red dots there, to trail it. If you had have done, well, that would have been closed down there, and that would have been almost 16-hour profit. So that would have been a very good trade indeed. For you guys who've got our pro version of NinjaTrader, you can see you click on the trade button and you have your trade management there. So what you could have easily done is when the market was back at this level, if you then just click on ATR, which is that button there, that will then swap to the ATR stop for the trade management. Or you can use that button, which is the bar one, so it would have trailed at the bar highs and then probably stopped you out at that level there. So there are options to change the way your trade is being managed by using our trade module, trade manager here. And obviously this then does your position sizing. So if you do your trade, I can't do that because I haven't got data connected. But if you do the trade, it then does the position sizing and orders all for you. So a lot of you have got the pro version, so you'll be able to take advantage of that. Mazir has just said that MT Predictor actually predicted that high even before the focus on some fundamental trading rooms out there. Yeah, that's yeah, it's quite a good call on that. So are there any questions on that? Just a review of our, or just a reminder of what our W3 trade setup is. I haven't gone over that for a while, but just to remind you that our W3 trade setup is a wave 3. In other words, what we're looking to do is we're looking to catch the wave 2 in an Elliott wave sequence. Remember, we start our Elliott wave sequence at the higher time frame support and resistance. That's why I developed my unique isolation approach to Elliott wave, because we don't place Elliott wave counts on the chart all the time, because the markets are random half the time. Therefore, I don't believe that Elliott wave can be used in the way it's traditionally taught. In other words, it can then build a picture 100% of the time, because anyone who's followed Elliott wave will know that it breaks down so many times, it just becomes useless. So that's what I developed. So I said, right, okay, we start our Elliott wave sequence in isolation when the higher time frame picture becomes clear. So that would be the start I'm circling there. The initial move down would be wave 1. We then have an ABC correction up into a wave 2. After a wave 2, we're then looking for the wave 3, i.e. into the typical wave 3 as a swing. Typically, the wave 3 is the longest and strongest in a completed 5-wave sequence. That's why the wave 3 typically has profits that are large in relation to the initial risks, i.e. the profits are large in relation to the losses. So this example here was an absolutely perfect example of that, and it's why the W3 or wave 3 trade setup is one of my favorite trade setups here. So it's a good one to look for, basically. So are there any questions on that so far? In that the idea of MT Predictor is that half the time the markets are random and you can't see a clear picture. Half the time the markets are clear, and we deem it as being clear is when the market is making a reversal off a higher time frame DP support and resistance again. Yes, Sylvian says, do you actually look at this minor pattern coming down here once you're in a wave 3? You tend to just use the higher time frame support and resistance. So in this case, on the 15-minute chart, there was the last low. Okay, remember guys? We look at the last swing into the high or low. So that was the last high. This was the last swing into the high. For you guys who are new, you'll see us doing this week after week after week after week. So that, just put it back here. So that would have been the DP support pivot to use. So that would be in the area of the higher time frame support, or initial higher time frame support. So when we come back to the 3-minute chart, I'll go back again, scroll back. Can you see how suddenly that makes a lot more sense in that this typical wave 3 WPT was at our higher time frame support. So therefore you don't really want to worry about these count these little wiggly swings around here. You're looking to have the trend down into your next higher time frame support, which coincidentally in this particular example is also at your typical wave 3 WPT target. This is the danger of trying to fit in Elliott wave counts all the time. So you could deem that in this period I'm circling here, the market was a bit random. In other words, you can't, I mean, that's probably an ABC correction, you know, what's going on here, you don't know. So don't try and fit minor patterns in with everything else. It just simply doesn't work. Just keep it simple. Here, you're anticipating a wave 2. You're anticipating it to go down to the typical wave 3 WPT, which is in the direction of the large degree trend into your higher time frame support. Keep it simple like that, Sylvian, and that's basically what you're looking to do. If that makes sense. That was a good question, actually. Right, now that's all well and good, because that was an absolute perfect example. It's a perfect example in hindsight, looking at it now, and it's a perfect example from last week when we actually anticipated it before the market got there. So a pretty good example all around. So let's have a look at yesterday. Let's just clear everything off. I'll go out to the higher time frame chart, clear everything off. Go back to before yesterday unfolded, because I want to have a look at ones where it wasn't quite so clear. So yesterday, before yesterday even opened, that was the last major pivot swing high, wasn't it? One we're circling here. So we right mouse click, we do decision point. That would have been an area of resistance on your chart before yesterday even opened. Let's go back to the 3-minute. So this is what the market was doing yesterday. There was your higher time frame resistance. This is sometimes when it's a bit confusing. As it was going up, you had some sell signals. Obviously, MTP trend is blue. You don't really want to consider those. It then starts, there was a TS3 buy set up there. That was probably a small wiggle there, which wasn't absolutely great. However, if you had have considered that as a trade setup, that would have been a losing trade. Remember, losses can and will and do unfold. But we're trying to keep these losses small in relation to the profits we saw a minute ago, which were good trade setups. The ones that were confusing were these VS setups here. Do you see these ones, these VS setups here? Did anyone look at trying to take these yesterday? The reason I say they're confusing is because if you go back to the 15-minute chart, it did make a little minor wiggle here. So if you had have gone back here and said, right, okay, I can place a DP off this high, that would have given you a minor resistance. But can you see how this is such a small little wiggle, in comparison to the other swings? So the point I'm making is that even though at this point here, you did come into higher time frame resistance at that sell setup and that sell setup, both of them were where our MTP trend was gray stroke red. So both of those looked like they were potential setups. Just be a little bit careful because you were on such a little minor swing, and that was the major resistance there yesterday. Do you see that? So it hadn't really got to the major resistance. Also, what do we know about VS setups? What should a VS setup do once a VS setup is triggered? A VS is a volume spike. So if you guys who are new, go to the customer section of the website and you'll see some previous webinars where we looked at the VS setup in detail. But basically a VS setup is where the market makes a move beyond a previous pivot on a high volume spike. That's why little red triggers are on our MTP VS signal here. It then fails to follow through the next bar. In other words, it's a failure to follow through to new highs or new lows. It's a trick or a fake out by the professional traders. In other words, the professional traders in a situation like this are normally getting short and then catching the amateurs out who then trying to buy on and break to new highs. But because the professional traders are the ones with the big money, normally a VS setup will go with you fairly quickly. So if you get a situation like this, that you get triggered into a VS setup here, and the market just meanders sideways like this and goes absolutely nowhere, this is not the kind of pattern that we expect from a VS setup. I've said this a few times before. We expect a VS setup to go with us pretty much straight away. So if you were in that yesterday, get your stop to break even pretty sharpish. And that's what Mark just said just there. So you're dead right, Mark, because it's not going quickly. Therefore, it gives you a warning sign that professionals are not in the market as you anticipate. Therefore, get your stop to break even. But you see also, because we hadn't reached, if we go back to here somewhere, we hadn't reached that higher time frame resistance. Do you see that? There's the higher time frame resistance. We hadn't reached that anyway. That was also a warning sign to you that perhaps these VS setups may not be as good as you hope. So again, another example, if you're short on that one, again, it gave you two opportunities. You know, this should have gone with you. If it went then back into loss, then went with you again, you know, just scratch it, just get out. It just, it's just not, it should go with you straight away. So does that help yesterday in that the picture wasn't particularly clear because you weren't at high time frame resistance, you know, the good one that was up there. So this again is what we're trying to do with MT Predictor. Mark said that if you're looking at this, do you ever go out into like a 60-minute chart? Well, if you're not clear on the 15 or on the 3-minute, well then you can, sorry, the 15-minute, if the picture's not clear on that, you can then use an hourly chart. If I just skip over to our standalone version here, I mean, here's an interesting how we've got live data here. So this is now quite interesting as well, is that we're at higher time frame resistance. That's the one we were looking at a minute ago. You know, I wonder if we're going to get an ABC correction here again as well. We don't know, but the point I was making is that these are all on the regular trading hours. You see that, the RTH. So these ones are what we call the day session. In other words, from 9:15 to 4:15 New York time. So if you're then using a 24-hour chart, which is the one I've got here, this is now a 24-hour chart. You see that there, 24-hour chart of the ES. Then perhaps you can use your hourly And if you actually scroll back, I think this was absolutely phenomenal, is that I'm scrolling back here on this hourly chart of the 24-hour session. That was the last major high, wasn't it? So if I place DP up there, that's a fairly small DP. I want to place one off this one because that has then produced a slightly bigger resistance area. But can you see that resistance area? Just take that one off because that's a bit too small. That resistance area, can you see how that was there? Look, we're back on the 15th of May. We're back here like almost last week. How that resistance area is on the chart already. And just look what the market has done today. Bang, up into that 60-minute resistance. But I just want to show how that's been on the chart for such a long period of time. And now when we come down to the 15-minute chart, let's go back to here as well. We've come up to basically a double top there, very nicely indeed. So that's probably when you want to use your hourly charts, when you're probably looking on the 24-hour session, if that helps, Mark. And what we like to see, I mean, I particularly like to see, is I like to see the 24-hour chart coming into resistance at the same time as the day session only or regular trading hours chart is coming into resistance as well. That's quite nice when the two are telling us the same story. Good. Now that's all well and good on the USE minis, but you may not trade those. So let's have a quick look at some Forex charts. Just want to show you about projecting in advance. I'll just take that off on the British pound. This is the 4-hourly chart of the British pound. So same idea. We're looking to go out in advance. So the higher time frame would probably be the daily chart. So where would the support levels be if I perhaps use training mode on our British pound? We'll go back quite a few days. So here, this is the last swing into the high. Do you see that? That would be the high. This is the last swing into the high. Right mouse click off this. This gives you an area of support on the higher time frame. Oh, by the way, for you guys who didn't see, that was our weekly support DP zone that was on our chart on the daily chart. And look what the British pound did. So when it fell off a cliff like this earlier in the year, on the daily chart, look where it came into support, right at our weekly DP. But anyway, I digress. So this is the daily support. So I'll just turn this off. So if we now come down to the shorter time frame, do you see what it's done? It's come right down into this area here. So we wouldn't be looking at any buy setups down here. IMTP trend was red, but that's where the support came in. So there's no surprise there's any support. There's been a rally off that support. It would have been nice if we'd had a buy setup at that time there, and then it would have been an ideal long trade setup. But that's the whole idea. We're looking to work in advance. And then people say to me, well, you're only using perfect examples, but that's the whole point of it, is that what we're looking to do is we're only looking to trade when the picture's clear. When the market is not making a reversal at our anticipated levels, and it won't do that literally half the time, or maybe slightly more than half the time, the market will not do what you anticipate. That's when you deem the market's random, and then you stand aside. If the picture's not clear, you stand aside. If the picture's clear, you then look to do trade setups in that larger degree direction. Another one we were looking at, wasn't it the Euro Canadian dollar? We were looking at this last week, weren't we? Whereas here we had daily support with a 4-hourly DP buy that went right up into that one. And then we were looking at the VS sell at higher time frame daily resistance. And we were saying that largely trend was down off that into potential support down here. And we were looking at, first of all, was that a good trade setup? Yes, because it was coming in at higher time frame resistance. Was this a good buy setup we're looking at? We were saying no, because the largely trend was potentially down still into this support zone with our MTP trend as red. So even though this has gone up a bit, it just seems like it's gone nowhere in the last week, isn't it? The trade setup to be in is the one off here, down into this potential support zone. Now, we don't know whether this is going to be work out as anticipated. That's not the idea of MT Predictor. No one can predict the future. We're not the Avengers. It's not the end game. We can't predict the future. All we can predict is that when the trades go wrong, and they will, position sizing keeps your losses small at one risk unit. when they go right, what you're looking to do is have profits that are large, not just in dollars, but large in relation to your losses. And hopefully over time, you'll have enough trades that have large profits compared to your small losses to move your account up over time. And that's what MT Predictor is all about. Let's look at an example where perhaps the things aren't working out quite nicely. I mean, here we're looking at having a potential target up there with coming off that support zone. So on the euro, on the 4-hourly chart, this worked nicely. This was a lovely VS setup coming off that low, but it hasn't quite reached that target there yet. That's why MTP trend is blue and the large view trend is still up. So that hasn't really got to the level. In other words, the market pattern is not clear. It's not really working out as anticipated. What's working on the euro? Again, here's a good example we had from last week in that this was our higher time frame support zone. This is our hourly chart. These VS buy setups, in hindsight, would have been really great, but they didn't unfold at the higher time frame support, therefore weren't ideal. And this is the frustrating thing about trading. And I don't know about you guys, I find it really hard psychologically when you have a setup that works out really well like this, but doesn't quite come into the pattern we're trying to sort of build. In other words, the trade pan we're trying to build. And then you say, oh, well, perhaps it doesn't need to be quite that clear. Therefore, I may just tweak my, my trade plan a little bit to include trade setups like this. And then you have 4 or 5 ones that don't work out because the picture is not clear in relation to the higher time frame support and resistance zones. So this is where the markets play psychological games with you. And basically, it's the hardest part of trading, is what we talk about quite a lot as well. In that, what we're looking to do with MT Predictor, in other words, market random half the time. We wait till the market makes clear reversals at higher time frame support and resistance, and then we do our analysis of that. Is that the bits in between, i.e., we're having the patience to wait until the picture becomes clear. And then also the hard thing, perhaps with like this example, having the patience to sit through a short trade while the market is messing around like this. Again, that psychologically is awfully hard to do. So I think some of the hardest things of trading is not necessarily the technical side of doing the analysis, it's the games that the market plays with your head. The psychological part of trading is by far, I think, the hardest thing that we all have to deal with. So, hopefully I try and talk about that a bit in our webinars as well. Right, does that all make sense to everyone? Yeah, PH has said that if you're in like a trade like the euro, like this one, if you're in this VS setup here, and you're just a couple of ticks short, well, then what you can do is then perhaps trail at the 1 bar, the 1 bar low, and then get stopped out about there for like a 4-hour profit. So you can do that if you're awfully close to your target and you want to then lock in what's a reasonable profit. 4 times initial risk is quite a good profit. Then you can do that. There's no shame to that, to locking in a profit that's very, very close to your target, as long as your profit here, your R number, is quite good. That's what you're looking to do. Yes, Mark, hopefully you become more familiar as time goes on. I mean, as you do this week after week after month after month after year, you will start to really get the hang of waiting until the pictures become clear. And then as we said last week, I mean, I just find it absolutely amazing when, we can do, I'm just going to find, for one from last week, when we can actually project in advance where we anticipate the markets are going to go. And it just does it. It is absolutely incredible feeling when, you do that. And there will be times, when this does just, it's just absolutely great. I just wish that markets did this all the time. It would just be so much easier if every time we placed analysis on our chart, it worked out as anticipated, we made a big profit. But I'm afraid to say the market is not like that. And this is the reality that I do need to keep telling you, is that the markets will be painful, hard, and just downright frustrating, if I'm allowed to say that phrase, a lot of the time. And this is what so few gurus actually tell you, is that trading is actually hard. It really is difficult. It's hard psychologically. It's hard to have the patience. It's hard to stick with trades. You will have losses, and it's not an easy life. It just, it really frustrates me. I don't know about you guys as well. When you see so many of these adverts and emails and people talking about all these systems that will make you millionaires overnight with little or no effort, it just really is simply not true. And for any of you who've been in the markets for any period of time will probably agree with me that actually it does take time to become a proficient. It does take time to learn what to do. It does take time to get used to do this, to get good. But it's worth it in the long run. But again, that doesn't really sell software, does it? If I spend all my time telling people that they've got a low probability of success and it's really hard work and you've got to do lots of effort, it's not a very good selling technique. But and I'm sorry, guys, that's what we do here, is we want to give you a big dose of reality, because then when you get there and do the markets yourself, you suddenly aren't confused and saying, well, our guru told us it would be easy, but actually it's not. So I hope you enjoy the big dose of reality and bringing you back to earth in what we teach here. Right, so hopefully this has been a good webinar. We've got a couple of minutes now. So are there any last questions in the last couple of minutes before we round up the webinar today and then move forward from there? So any last questions just before we do? I mean, if there are questions that you have or you think about after we've finished the webinar, do drop me an email. You can get to me, steve@mtpredictor.com, and we'll try and answer them in next week's webinar. I want to try and make this as interactive as possible and try to make sure that you guys, get up to speed and do the best you can with the software, because it just helps everyone if you do make the best of it. So again, want to stress about the reality is that MT Predictor is not a black box system. We don't look to trade all the time. We look to wait until the picture's clear. So here's another example, exactly the same as last week, but probably this one won't work out. Why do I say that? Because last week's one's worked out so well. So I'm not quite sure whether this one is going to be as ideal. It'd be great if it did. But again, we're working in advance for potential areas. I mean, this might well come back down here a bit further, then you'd have to redo this analysis, but you can see how you're working in advance of the market again. But the reason I'm a little bit less excited about this week's one is because last week's worked out so well. And I know the markets go in cycles. And I know what happens is you typically have a period when you get lots of good setups. Then the market will give you some losing setups. Then the market will give you some good setups. And I've said it before, is that amateur traders wait until they've seen some good setups. They then take the next ones which are losing. They then panic. They then stop. They then miss the next ones which are good. They then panic even more and get back into it. They then get the ones that are bad, and they're in the cycle on the wrong way around, if you're with me. What you need to do is, after a period of losing trades, or when the market has been hard to you, then odds on that's when the market is going to be suddenly get better. When it's been good, you then have to be a little bit more cautious, because then odds on you're then going to go into some losing trades. So I want to try and to get you to think the opposite of what's happened. In other words, you think about a wheel. Wherever you are on the wheel, think about what's next on the way round. So if you're in a good part, the next part to come is going to be the hard and frustrating part. If you're in a period of losses, the next part to come round is probably some good trades. So just try to think the opposite of what most amateurs do. Very hard to try and think like that, but hopefully that's a tip. Nazim has made a good point, because if you look at the 15-minute chart, interesting how we're coming into, there's major resistance. I wonder whether, we are going to be setting up for a high here as well. So we don't know. We'll wait and see on that. Again, my reservation is that it was too good last week. Where's the 15-minute support on the day session only? just clear this all off that pivot there. There's our 15-minute support, so that's where we came into. If it breaks this 15-minute support down here, there's an awful long way to go. So there could be potentially a lot of downside here if this 15-minute support zone is breached. See here now it's gone down, so we take this analysis off and see whether we do get another wave B. So keep an eye on this one and see what it does. It would be lovely if it worked out exactly as we had last week. If it does, you know, you've got the tools now to anticipate areas of where you may well get an A, B, C correction. But again, just having the back in your mind that last week's was so good, it would just be uncanny if this worked out exactly the same as last week. And I'm just a bit wary that that's going to, you know, it likely is going to hit twice in the same time. So just be a bit, you know, just erring on the caution on this week's one compared to last week. Right, no more questions coming in now. So I hope you've all enjoyed today's webinar. Hopefully it's been good having a review of how the market unfolded from last week, particularly as we saw working in advance, review of MT Predictor and how we look to trade when the picture's clear on the hard time frame support and resistance, understanding that half the time the market is basically random, and that's why you should be standing aside. So that's the main thing I want to stress for you guys. Have the patience and discipline to wait until the picture becomes clear. Do not try and just take MT Predictor on face value and take all these trade setups that you see. You'll just get hammered if you do. That's not the way MT Predictor has been designed. Wait until the picture becomes clear, which means trading a lot less than you're probably used to. Trade when the picture's clear, have the patience and discipline to wait for the good trade setups, and then accept the small losses and look to run your profits and hopefully get big profits over time that are bigger in our numbers than your losses. That's what we're striving to do with MT Predictor. Right, so have a good trading week, everybody, and we'll be back again to do it all again next week. Any other questions, drop me an email, but otherwise have a good trading week, everybody.